Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks of the Week. I'm Tracy Reinick, and I'm joined by Kevin Cook with two top stock picks that are in completely different areas. I'm covering a gold miner. Kevin is covering one of the hot tech stocks, but they both have number one ranks. And what does it mean to have a number one rank? That's the strong buy. That's the top rank that we could have. Well, it usually means the earnings estimates are on the rise, and they are certainly for my gold miner. That company is Barrick Gold. It's an easy ticker to remember. It's just GOLD. They have the ultimate in the gold ticker. So easy to remember and easy to know what they do. They do mine gold, but also a lot of copper. So they're in kind of this interesting area where they have both the inflation play with the gold, and then they have the industrial side with the copper. Right now, it's gold that is on the rise. It's hitting new highs here in September of 2024, virtually every session. But nobody's paying attention, but I am, and the miners certainly are. Most of them are unhedged, and that means when the price of gold rises, so will their earnings, as long as they can get it out of the ground and sell it. So that's the flip side for owning the miner stock, is that they do have to get it out of the ground. But Barrick has been doing so. And let's take a look and see what its earnings look like. Why is it a Zacks number one rank strong buy? And what the price of gold is doing to those earnings. So let's turn to Zacks.com, of course. I've already pulled it up here. You can see it's got the number one rank. It also has a good style score. It's still a value stock here, even though it's been rallying the last couple of weeks on the price of gold, but it's not at 5-year highs yet. So it's still attractive. It's got a D for growth. I'm not sure why that's so low, because earnings are expected to grow pretty dramatically. It's got the A for momentum because it is on the move higher, and so are its earnings. But the overall style score, the VGM, is a B, which is the second highest. So I'm still liking that. So in addition to being the strong buy recommendation, we have a good style score as well. Now look at this, the industry rank. Gold mining is the industry, and it is in only the top 31% right now, or 77 out of 251 industries we track. But I'm expecting that to change a bit as the price of gold continues to move higher, or if it does, right? Right now, it's trading around 26.50 to 28 or 26.90. That's record highs. A lot of analysts have it going possibly to $3,000 an ounce. That would be the next kind of resistance level. We'll see if it can get there here in 2024. But it doesn't need to get there to be a great market for Barrick Gold. And why is that? Because their all-in costs is anywhere from, $1,200 an ounce to $1,500 an ounce. And so with gold at $2,600 an ounce, you can see just how much extra free cash flow is going to be there and how good it is for these miners. So PE is at 16 times. That's not that crazy expensive. And it's got this great PEG ratio of just 0.49. And let's look at the detailed estimates. So because they're not heavily covered, we have kind of a mixture of on the sales data, but we do have earnings data for this company and quite a number of analysts on it. So the Zacks consensus, you can see, is expected to be up 50% this year on the earnings side and another 34% next year. This is just based on the price of gold and their production levels and getting it out of the ground. Now you can see the analysts are starting to get more bullish as that gold prices keep hitting new highs. We have one estimate higher in just the last week. We have two for this year in the last 30 days and one for next year in the last 30 days. So this is all bullishness because this company reported earnings a while ago. So this is not being raised on earnings that are coming out. We're still waiting for the next quarter here. This is simply the analysts realize with gold at these levels and holding above these levels that this quarter is going to be very strong on earnings and free cash flow. And then just looking down, you can see on surprise, the earnings history surprises, they have beat the last 4 quarters quite considerably with an average surprise of 21%. And I expect this to continue because the analysts get a hard time figuring out what the earnings are maybe going to be with the price of gold continuing to rise here. But you can see nobody's raising for the quarter yet. And one is actually cut in the last 7 days. I wonder if it's the same one that raised for the year, probably. But that could just be someone kind of getting in line and maybe they realized they were just a little too optimistic for this quarter. But all of this is looking great on the earnings side. What does it look like on the price to consensus chart? That's my favorite chart. I'm expecting, yes, it to be a wild ride, as I like to call it. You can see where earnings declining here on the consensus and kind of hit bottom a couple of years ago. But now with gold back at new all-time highs, we have up, 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 even through 2026. But they're just trying to catch up here for 2026. And so we'll see what that turns out to be. It all is about the price of gold here. And can it keep rising? Once you get a commodity with, this kind of bull run breaking out to all-time highs, it's not inflation adjusted, but it is all-time highs, then you tend to get some momentum in these types of commodity stocks, as I said. And you can see on the chart, look where we are. We're not even back to 2022 highs. So even with this nice run in the shares, there is, I believe, still quite a ways to go. I would expect the gold miners to break out past these 2020 highs eventually. And as I said, it still remains cheap. Now, what are they going to do with all this cash? They do have a big shareholder plan in place. They have a performance dividend strategy that's going on. So if the cash starts building up on the balance sheet over the next several quarters, they will pay out more. So they'll add on 5 cents for various markers on the cash flow side. So if they have, over $1 billion in cash sitting there, they'll pay an extra, 10 or 15 cents, I think it is. So right now they're paying 10 cents a quarter, but that may be going up in the next several quarters. Also, they instituted a share buyback plan, $1 billion share buyback as the free cash flows have gotten better this year. They started it only a couple of quarters ago, I think in February 2024. So this is, they're paying it out right now, and we'll see. That's going to reduce the number of shares, but, we'll see how much they devote to the share buybacks. I like both here. It's a good use of their cash because the shares are still cheap here. And shareholders will benefit from both the share buyback plus the dividend. That dividend of 10 cents a share or 40 cents for the year is yielding about 2%. So that's not too shabby, but look for things to pick up as the quarters go on if the price of gold remains at these record highs. It's just extra free cash flow as long as Barrick Gold can get it out of the ground. So I love all the gold miners right now. Barrick is one of the Zacks #1 ranks. So go for the ones where the analysts are now raising full year estimates for this year and next year once again. And Barrick is the one that they're doing that on. So Barrick Gold, GOLD, is my ticker. And now I'm throwing it over to Kevin with his tech stock that's also a strong buy.
Top pick is Okta, a leading provider of identity security. So let's take a look at Okta's business first. They say they're the world's leading identity solution. Basically, you're talking, cybersecurity using biometrics, whether it's, facial recognition, or it could be having special identity keys, that are exclusive to a person. So that's their focus on cybersecurity. I just want to show you some of the companies they do business with. They have a lot of partners. I want to scroll down here because FedEx made an interesting point here. This is FedEx recently saying, over a 36-hour period, we moved Workday, Office 365, WebEx, ServiceNow, Salesforce, Checkpoint, VPN, and Zoom to Okta. What this is about is integrations, right? So Okta integrates with all these platforms for identity security. Now, FedEx, I mean, obviously masters of logistics and speed and performance. So if they like what they got in Okta connections to everything else, that's a pretty big deal. Some of their other customers include AWS, obviously Salesforce, T-Mobile, JetBlue, Bain, the private equity fund, Adobe, and even Major League Baseball. I thought that was pretty cool. All right. I recently did a article on the bull day for Okta because it's back to Zach's #1 rank. Now, what's interesting here is we've got a stock that's been in some trouble. Less than 2 years ago, the worst thing that could possibly happen to a cybersecurity company happened to Okta, which is they got hacked, and some of their customer data was released. So, that when you're working with the Fortune 500 and enterprises like that, that's a big no-no. Now, it appears they haven't lost any significant business, but there has been a slowdown. They're not they're not growing as fast. They're not getting new business, and so this drama has been going on for at least a year, where the stock is way down off its highs. It was up over 250, I believe, and keeps fighting between $80 and $100. I recently bought it again around $75, and I wrote this report. If you want to find this, just search in the search box up here in the upper right, put in Okta and the word bull, and then scroll down and you'll find my September 25th bull of the day on Okta, where I go over some of the details and why Wall Street analysts still appear to be nervous, because some of them recently took their price targets down after this last earnings report on August 29th. And so I try and explain the bull thesis for Okta. They just, on September 24th, they created an initiative to basically catalyze and evangelize the developers with their platform, Auth0. All right, let's take a look at the fundamentals, and we're going to use Zach.com data here. Sometimes when I do these videos, I'll skip over and not show people what I'm looking at here. This left-hand menu is just loaded with tabs for fundamental research. And right now we're looking at the detailed earnings estimates page, and we'll also take a look at some other fundamentals. So let's scroll down and look at where estimates are right now. So we're in their second quarter, because this fiscal year 25 ends in January. So we're in the middle of their second quarter, third quarter actually. The last earnings report was second quarter, end of July. Growing revenues to cross $2.5 billion at a 13% clip, and next year is still projected to grow 10% to hit 2.8. So analysts haven't taken estimates down that much, and we'll see what the growth trajectory has been like for the top line. But quick look at earnings estimates here. Looking to grow profits to over $250 a share, almost 62% year-over-year growth there, annual growth. And next year is still there. So analysts, even after what was considered a mixed earnings report where Okta couldn't give the sort of guidance that the street wanted to see, that growth is returning to the levels of before, even then analysts took estimates up. So we've gone from basically 240 up to nearly 260, and next year's gone up a little bit too. Now, part of this, you want to always sort out whenever you see this after an earnings report, you want to see, well, how much did they beat by in the last report? Because that's the surprise that gets factored in to annual estimates being up. So last quarter was an 18% surprise. So we'll call that, a dime, 10 cents, and see that's basically what's factored into the estimates here, right here, going from, say, 248 to 259. But again, that's only 2 quarters into the year. So the next 2 quarters will tell us a lot. All right, let's take a look at, I want to show you the price and consensus chart. This is a Zacks proprietary tool where we plot the price of the stock against annual estimates by analysts for EPS. And so you can look at each year here, 23, 24, 25, 26. Hey, everything is up and to the right. That's what you want to see, right? But this is how depressed the stock is since their data breach, fighting to get back towards 100. The average analyst price target is near 105. And so I've always found it, to be profitable to take a trading buy, between 75 and 80. And look where we've come from. Yeah, the stock was well over 250 back in 21. That was sort of during the software bubble, the softosphere, I called it. But you can see the big green arrows here, earnings surprises. So I think analysts are still cautious. And when you read my bowl of the day, you'll see that it seems like they're waiting one more quarter before they take things higher. Let's take a quick look right below price and consensus and EPS surprise. EPS surprise are the green arrows, obviously up. You don't see any big down red arrows, so that's good. Fundamental charts. When you click on fundamental charts, the default graph you're going to see is EPS diluted quarterly. Okay, so we've got a recovery going on since a few quarters ago. We could also look at this as trailing 12 months. Let's see how that shapes up. So trailing 12 month is also troughed and coming back. I also like to look at revenue growth. I had mentioned I'd look at the top line trajectory. So I'm going to go revenue TTM right here. And boom. We've got a nice, this isn't a 45-degree ascent, but it's a good 35 to 40 degrees. So I think Okta is still a very important cybersecurity play. When you've got half a dozen companies to choose from. I own Okta. I also own CyberArk. Looking to get into CrowdStrike again soon. So that's the thing. These enterprises don't just have one provider. They will actually have multiple providers that specialize. So they might use Okta for identity security and CrowdStrike for some other aspects of global security. So it's not just one company takes care of all of an enterprise's needs. And so that's why I still like Okta right here. And I think, their next earnings report won't be until, late November, early December. I think buying it here in the 70s has good risk reward. Thanks for joining us again in this week's Top Stock Picks. For more great data from Zacks, research, estimates, and everything you want to know about a company, check out our latest promotion at zacks.com/promo.